Hey guys, how are you doing this day here? Today we will dive into the silver market, looking at silver in various ratios measured against SPX, all sorts of good stuff, CPI, currency in circulation, all that nice stuff for silver. And yeah, I hope you again enjoy the content, guys. And again, join the Substack if you want to have more stock picks and all that good stuff in this given sector, which is today silver. Yesterday we did uranium, so Monday will be uranium, silver will be Tuesday here, and then Wednesday will be gold. We'll have oil, platinum as well, uranium. So yeah, let's dive in here, guys. For silver, this is our list here that we have for silver, which we will go through every week just to see where we stand in time. And the price action here for the past few days here is great. We broke the big 33. We are back testing now. Good candle, up 2% today. So for now, we're still grinding it higher, and I still have my target roughly $38 here. And again, we could easily overperform because we are at that moment where we could see that shoot to the upside. And yeah, as you know, we're again relatively close to 40, and again short squeezing like you saw back in 2011. All of a sudden things can go really quickly here. So silver measured in US dollars at this moment in time looks good to me. If we don't hold here, I can see us going down to 30.5-ish for that lower trend line, getting hit there. But to me, this is, most likely the path in my view here. So great day for silver, great retest. And in the short term, our mission is now to take the breakout high, which is 34.3 roughly. Here we have silver measured in, again, world currency units, so like a broader basket. And ever since we broke in March 2024 here, this correlates to the 26 in the USD, we've gone up basically, very bullish manner, higher highs and higher lows. We're getting close to the highs of 2011, and I think we will hit that before anything major. And it's only 10% away. So yeah, we're making these higher highs here. You can see it, right? Higher highs, higher lows, and to me this is still a great looking view in my opinion, and we're gonna smash through that. Remember, this is a basket, so you have euros, you have yen, you have USD of course. So yeah, pounds, Australian dollar, I would assume as well. Here we have silver measured against gold. So we have the invert of the gold-silver ratio. This is the silver to gold ratio. And by the way, I'm trying to use a different software in order to record it a little bit differently. So maybe the level of my voice, the audio is a bit low. Maybe if that is the case, let me know, guys. I will change it. Still, I will say under pressure again here with the silver to gold ratio, but also we are making this little bit of a rounding bottom here at the end, and we really want to get back above the long-term golden here, and that is our wedge pattern that should again take us out and see silver outperform heavily. We're still very low in the ratio, and you can see here we're zooming out, so to the monthly, very low. And that is why gold has done well, really well. Silver has done equally well, and that's why you haven't seen anything big here where silver is actually outperforming like we were seeing over here, right? These big moves that comes around with like a period here. And again, we need to close what will be in the gold silver ratio terms, roughly 87 which in this case is roughly 0.011. 0.011. That is very, very low. 1.1% only, like silver. That is just, that is extremely cheap. When and if this resolves to the upside, which I think it will do, silver will start to outperform heavily. And again, a bit of a broader view here. You have a very clean, in my opinion, this is most likely the path. Big head and shoulders pattern with a little flag here, or curling at the end before breaking higher, and you can do the measured move. So we can do the measured move here somewhat quickly, something like that on top, boom, which takes us back to the highs, at least to 2011, and a 300% gain here. Excuse me, 200% gain here from where we are, in favor of silver compared to gold. Again, but first step, of course, is to undo this. Basically half a year, roughly 4 months worth of basically sideways action, and we really need to trade north of here, that range high. That's when I think it's gonna go really, really quickly for silver. Good, cool. Again here, silver divided by CPI, the highs of 2011, and then we have the highs of 2020. We finally broke a few back tests here, and now we're just making higher highs and higher lows. Big support, resistance is coming up here, as you can see right there. We have a resistance line going down from these 4 highs here, and that's what we are fighting right now. And also a horizontal here, very important level, in this case here 0.11, because that was the big breakdown back in 2013, bear market, right? We had a huge round trip, testing twice double top. So again, first step is to take the short term here, well, the 5-year trend line, and then the horizontal. And when and if that gives in, we are going to see that, in my opinion. And how are we looking on the daily here? Still okay. Again, we are into resistance here very shortly. So let's see how it reacts at that point in time for the beloved silver against inflation. As you can see here, like we saw on gold, gold has broken the 1980 trend line. It has broken. It did it back in mid 2024, and silver has not yet, been breaking that trend line. We have been breaking the 2011 trend line, which is very, very good, of course. But there are so much resistance here coming in within the next 20% of this ratio for silver. But again, as you can see here, April 2024, big moment. Big moment for silver at that point in time. Silver against SPX. Let's have a look on the weekly. Ooh, okay. So I want to focus mainly on, as you can see, these highs here, and again here. So that, to me, right around here, you can see that is resistance. So once we start to trade north of 0.006 roughly, and change, that's when silver will have a short-term outperformance against the SPX. So the broader markets is still, I wouldn't say a better play, because basically for the past 4 years they have done equally well. So neither the SPX nor silver right now is outperforming either of its opponents, and this way silver will outperform. If we start to come down, of course, then the SPX will outperform. So right now it is a dead race between the two, and hopefully again silver will outperform. And we have the long-term trend line from 2011 has been breaking, but not with momentum. It's like a grinding sideways breakout. So a huge base here potentially, and that could be the path when and if we take out that horizontal trend line. The Nasdaq here, I have multiple trend lines on here. As you can see, we have the golden here from the highs, a bit of an internal one going on here, right, and the blue. And as you can see, we are breaking the long-term stuff, right? That has been broken, and now I want to see those highs here gets taken out, and therefore also leave the blue channel here. So these breakouts can take some time, but once we start to trade north of, to be really precise, 0.0017 in this ratio, silver should be the better play for against the Nasdaq. Again, this will be some sort of like a rounding bottom, like this, right? We have the rounding here, so that will be again a lot of tailwind if we can have silver to outperform tech. And yes, tech has been by far the best, you know, sector to invest in for the past, I don't know, 5, 10, 15 years, 20 years even. Well, not 20, at least 15 since the crash there in 08. So that is a huge benchmark to take out. When will it happen? We will have to wait and see. Silver against the Dixie, the DXY. Again here, massive wedge pattern breakout. 20 years roughly. Beautiful. This is textbook, guys. This is absolutely textbook. You know, wedge pattern setup here, or triangle setup. Beautiful. And we're into, again, the bear market, bull market, you can say, horizontal level at 0.33. Anything north of that, and silver will outperform even more, because we have started here, but silver will then start to outperform even more the DXY. That is something to behold when and if that can be taken out. When and if, again, we shall see, but again, we are definitely trying to have that big breakout for silver. Good. Monthly here. This is money supply divided by silver. So we have to invert this to get, you know, the increasing price being in favor of silver. And look at that. This is absolutely an insane horizontal level. You can just see it here. What is that? You have guessed it. That is a Head and Shoulders, right? Maybe that's, you know, a little bit of a tiny shoulder as well. But once we start to trade north on this, yeah, in this case, south of that trend line, you can start to see that we are measuring a target that is above the trend line coming down, right? We are breaking out from the trend line high from 1980. And then you have silver outperforming M2 money supply, which gold is doing at this moment in time, by the way. So yeah, 10-year neckline is up for grabs at any moment. We shall just wait and see when and if it gets taken out. Right there, very clean level. Anything above is massively bullish silver. Very bullish silver. Good. Here we have silver against the housing markets, and we have been breaking that trend line from 2011 down to here, right? Breakout, really good. So to me, that is still a big breakout has happened there for silver in relation to the housing markets. Yes, there is resistance above and a longer term massive resistance, but here this is just suggesting to me that we are at least going to see the highs from 2020, right? At least, and then I think we will attack that trend line at some point in time. But that is not to come, you know. This is the monthly, by the way, monthly time frames. So yeah, banking. Oh, look at that tag there. Okay, anyways, here we have silver against Bank of America. That's the trend line to look for. When and if that gives in, right, that whole ceiling there, we're gonna rally all the way to the triangle high. So from that breakout, roughly, we ought to see 40% outperformance by silver in relation to Bank of America. Again, you can't see we haven't been breaking it yet, so we have to wait for the break, of course. But the setup is definitely there to again, play the ratio if you want to go long silver and short the Bank of America. And again, having silver outperforming such a big player in the banking system, I'll take it. It's really, really good. It is really, really a good tailwind to get as well here. This is a bit skewed because I can't get it to the log scale, so we will skip that. I'll fix it for next time. And here we have, again, we have to invert this to get the correct, direction. Silver is breaking out against PPI, so Producer Price Index, similar to the first one there. This is gorgeous, and yeah, a 15-year breakout has happened in favor of silver. We broke on the 4th, deep back test, yes, but to me, until proven otherwise, silver is outperforming the PPI, and that is, in my opinion, stagflation really. Last but not least, silver against the currency in circulation, very similar to the recent chart, the M2 money supply. Boom, right? That is the inverted head and shoulders breakout. We will attack the red long-term trend line. We will probably pull back, and then boom, all bets are off at that moment in time for silver, measured against money in circulation. So overall, silver is doing really well in USD terms and in world currency units. Still hasn't been breaking out against the big guys, CPI and the broader markets and all that, like gold is already doing. It will come, I have no doubt. When and if, in my opinion, once the ratio of gold to silver starts to trade below like 87, I think all bets are off. So again, I think silver still looks good for itself, but we need these one to be outperforming as well. So that's all I have, guys. Have an amazing day, and yeah, stay safe, guys. Cheers. Bye.